Hello everyone, thanks for tuning into Indian Markets Unveiled, a daily market podcast where we tap into what's happening with the global markets, the domestic markets, and how one should see the scenario in the economy overall. Here we discuss the long and short of key things that one needs to look into for the trading session. We are starting a fresh week, and to start with the global update, the tragic war environment has developed between Israel and Hamas. That's the biggest news which is doing the rounds, and more than 1,100 people have been killed as tensions between Israel and Hamas escalate. We share our deep condolences to the people who have lost their lives. On the concerns of Israel and Hamas, the Israeli equity markets fell nearly 6.5%. However, the situation during Friday's US session looked completely different, as US non-farm payroll increased by around 336,000 for the month of September, a lot more than the expectation of 176,000. It showed that the US labor market continues to be strong. On that news, the benchmark index S&P 500 moved around 50 points higher, that is nearly 1% up move, and Dow Jones moved around 288 points on the higher side, that is nearly 0.5% or more than 0.5% up move. However, the bond market reaction was a bit worrisome, as the US 10-year bond yield went to 16 years high at 4.8%, raising the concerns for tighter monetary policy. However, the Dow Jones futures are down 200 points this morning. On the Asian front, most of the markets are shut due to natural calamity, while Shanghai market is trading around 0.6% on the downside this morning. Now let's take a look at the commodities front. On the commodity front, the Brent crude oil prices jumped nearly 4% this morning and trading at around $88 a barrel, fueled by the geopolitical tensions between Israel and Palestine. The gold prices also moved higher and trading at $1,850 per ounce. The commodity prices are expected to be volatile amid the rising geopolitical concerns, and investors would keep an eye on the commodity prices and its potential impact on different sectors if it continues to be elevated. Let's take a look at the domestic front, the Indian markets. The big focus would be on the Q2 result of Indian listed companies. Yes, the results season is up and started, and starting with the IT pack, TCS would be reporting its numbers on 11th of October, whereas Infosys and HCL Tech would be reporting their numbers on 12th of October. The expectation is IT companies would report subdued numbers on the sluggish demand environment in US and Europe, but the commentary is expected to be a bit better in terms of order visibility in the upcoming quarters. In terms of flows, the FIs have sold nearly 8,400 crores so far in the month of October, whereas the DIs have bought almost 4,435 crores so far in the month of October. So constant support coming in from the DIs, however, the FIs are selling big time. In terms of the key levels for the indexes, 19,787 is the key level to look out for the higher side, and 19,610 is the level to observe on the lower side for Nifty. For today's opening, the Indian markets was already indicating a weak start for the day amid the global uncertainty. The sentiment across the globe is looking as risk-off in the backdrop of geopolitical concerns in the Middle East. During the early opening hours of today, the benchmark index Nifty 50 opened with a cut of around 144 points, and Bank Nifty is trading with a cut of around 500 points. However, small cap and mid cap indices are trading even with larger cuts, so broader market indices is feeling more heat. The Nifty mid cap index is trading with a cut of around 1%, and Nifty small cap is trading with a cut of around 1.5%. The volatility index is also inched up sharply, and it is up nearly 13% this morning, which is a big concern. In terms of the laggards, Nifty Media, Nifty Metal, and PSU banks are trading with sharp cuts, whereas Nifty IT is holding the ground and trading in positive. In terms of stock-specific moves, Divi's Laboratories, HCL Technologies, and TCS are leading the pack, and Adani Ports, BPCL, and Adani Enterprises are dragging the indexes. So there are clearly concerns coming in from the global markets, particularly the Middle East, which is having an eventual impact in the domestic markets, but one needs to keep an eye on the results season which has started, because that is going to have an impact on the overall markets as well. Now let's take a look at the stock-specific news, and Titan is the first one we need to consider, as the company has reported a 20% year-on-year increase in standalone revenue, with emerging business experiencing 29% year-on-year sales growth. Specifically, watches and wearables saw a 32% year-on-year sales increase, while the jewelry division had a 19% year-on-year sales growth. So clearly, segmental growth is something which is to be taken into consideration. Next news on the radar is Tata Consultancy, as the services said that its board would consider a proposal for buyback of equity shares on 11th of October. Reliance Industries has announced a 4,967 crore worth of investment by Abu Dhabi Investment Authority (ADIA) in its retail arm, Reliance Retail Ventures Limited, acquiring a 0.59% stake. Reliance valued its retail company at a pre-money equity value of around 8 lakh crore, propelling it into the top 4 firms by equity value in India. On Friday, TVS Motors initiated production of CEO2, their inaugural electric vehicle created in collaboration with BMW Motorrad at their Tamil Nadu plant. So clearly, post-market, there was a news flow coming in for TVS Motors. Tata Steel is another stock which is to be considered, as the company's India business saw a 4% year-on-year increase in crude steel output at 4.9 million tons. However, their Europe production dipped by 17% on a year-on-year basis at 1.9 million ton due to ongoing relining at a blast furnace in the Netherlands. So all in all, there are stock-specific flows in the IT sector. IT sector needs to be considered as result season starts with the IT pack, and apart from that, the jewelry segment stock Titan will be another company which needs to be in focus. TCS is another stock in focus. Of course, Reliance Industries has a news coming in which keeps it in focus, and TVS Motor along with Tata Steel are the news-basic flows, news-specific companies which needs to be considered. With this, we come to the wrap of Indian Markets Unveiled for today's session. To sum it up, the setup for today's session in Indian domestic market seems to be in the favor of bears, but market might remain volatile if the geopolitical situation intensifies further. Indian investors should keep an eye on CPI, WPI, and IIP data awaited this week. So clearly, economic indicative action coming in for domestic markets, as the inflation data and wholesale price index along with the production data will be in focus. Also, there would be a lot of focus on the US CPI inflation data as well. So out and out, it is going to be a busy week with bunch of earnings and whole host of macroeconomic data points. Investors are cautioned from taking big positions as the geopolitical environment remains fragile. However, correction in quality stocks might be the trigger for good entry opportunities. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art we understand. We at Devin Choksi have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait further and embark on the wealth building adventure together. Thank you.